earnings reaction on a positive top and bottom line beats and decent guidance on Broadcom, AVGO. As you can see right now, down 7%. Strong support, and I tell you, I don't think it'll happen in an extended hour. If it could get down to like maybe 140, 139-ish, might happen tomorrow after the monthly unemployment report. But just let me show you this level in here. All these old highs. It's also the midpoint of the week that we had that massive gaping lower open, higher trade. Somewhere between 135, 140. I think it's probably going to be. You also have a corresponding pivot monthly S1 trading at 136.74. So just thought I'd throw out some guides for you on areas that I believe that this market can kind of hit some support levels that I would be testing the waters in. I still think that broad market decline is coming. Today we filled the first, or at least came into the midpoint of the gap that we left here on August 15th. There's a minor gap at 136, a little bit more interest there in the S&P 500. And if we get really down and dirty, or at least re-challenge the average of the lows for the week that we made on August 5th, that Monday right there, and you come in probably, I don't know, 517, 520. We've got, I think, if you look at this market, we just didn't get there in one day. It took a period of about 10, 12, 15 sessions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Depends on how many times you want to go back and count. This high, that high, whatever your high count is, that watermark right there. Either way, it took time to go down. It should take more time to make that re-challenge of that test. And if that's the case, that means the rest of September is going to be ugly. That also means maybe the first couple weeks of October, and you want to be patient. Now, if you can be patient, let me give you some ideas of some stocks. Now, this might not help you. Tomorrow, I would expect the dead cat bounce after the unemployment report on AVGO if there's any follow-through weakness into that 139, 135 level. I'd pick up some shares and quickly scalp against that. But let me give you a couple other ideas of some stocks that I'm looking at. You may recall Starbucks had an enormous gap higher based on a CEO or at least a change of guard, so to speak, of the guy coming in from Chipotle Mexican Grill. I like it, but I still think that this is going to now get filled, this gap in here. So somewhere around 81 is, the old high, the last conditional like gray line in the sand right here. I would not rule that out. And so that's one that get your pencils ready, start writing down levels and specific quality stocks that you want to be buying on a bigger dip in the next few weeks. That's one. NVDA is getting a lot of bad publicity and everyone talking about the 100 mark. It wouldn't surprise me here to see that come back in the 94, the midpoint of that August 5th range. So it wouldn't surprise me to get back down into there, if not even maybe 90, test that low one more time. CDNS, Cadence. Cadence Design is already at that low level that I'm talking about on August 5th. And if no one's buying their product, that means they're not designing chips, and that means they're not selling chips. So the semiconductors can still see some more weakness in the weeks ahead, but you still want to buy a bigger dip. And I think the month of September, October, we're going to get that dip. So besides looking, that's one clue. I'm not saying buy Cadence here. I would prefer to be with AVGO on a bigger dip. I definitely would say, and I'm not Johnny come lately on NVIDIA. Bottom line, NVIDIA is going to have one whale, but a great, I believe, fourth quarter. And right now, what's the problem with the market? People are raising cash. They're a little scared. You got seasonality. Oh, I better take some money off the table. Who's going to be in charge in the White House in the next 4 years? Oh, if it's this, taxes will be higher. Maybe I take some money off the table now. And then again, the Federal Reserve. Is the economic conditions weakening or about the same? The Beige Book came out this week, said moderate growth. I don't know what the news is talking about. Go to the Federal Reserve's website, Google it. Go and look at the latest releases. Read the report yourself of all the 12 reportable districts. There's no recession according to the Federal Reserve, and that's what the Federal Reserve looks at when they convene to discuss interest rates. I fully expect Jay Powell to be committed to the path of of changing monetary policy, starting with a token 0.25% rate cut. Will the market like it? I don't know. But between now and then, the market may be sending a message to the Fed, you better do something. We're in a temper tantrum mode. And that's why I think we have more weakness ahead. Be disciplined. Buy another extreme low. Have your orders working. StarBucks would be one. I believe that AVGO, I've already given you. I've already also talked about Broadcom. Higher tiered stocks you want to be in. Here's one that Hewlett Packard's probably got another couple bucks. HPQ, the computer maker, not the software enterprise. This is two different companies. The computer maker, Hewlett Packard, probably can get back to 31, 32-ish. But DELL comes back into like, say, maybe not exactly into the absolute low at 86, but right around here at 92. I mean, that's 15 bucks from here. That would almost present kind of a double bottom, and that, I believe, is what this market needs to do. Most times we get big thrusts to the downside, you get little rallies, and they come back and form double bottoms. Double bottoms come in several forms. This is the number 1 point. The number 2 point would be a little higher, equal, or slightly less than. So bottom line is I'm expecting double bottoms. Pick out your quality name stocks. Which ones do you want to go with? I do believe that StarBucks is going to have a decent pullback, and you want to have that. And I'll give you a list over the next couple days, probably into next week as well. So those are the ones I want to stay focused on. Let's say we are going to end up in a recession. Just real quick, Dollar General, all the lower merchandise, Dollar General, Dollar Tree, 5 and below. All of them have said, hey, no one's buying anything from us. But then again, Target blew out the doors on earnings. I'd be a buyer at 136 to 140 in that range in Target as well. Walmart, hey, everyone's coming here to shop. Well, which is it? And Best Buy, by the way, Best Buy had great earnings. Hey, people are walking in here buying all kinds of stuff from us, but no one's buying anything from Dollar Tree because they're too broke. Doesn't make sense. It's inconsistency in the market. So look for quality names, especially the more recent ones I just gave you that had great earnings and the market sold off. Now, I think you come in a little bit weaker. We want to look for that. I would say this SPY, I'm still holding some positions on the puts, as I've been sharing with you guys per our newsletter and advisory service. You can look at last night's video and go through those lists and those prices if you'd like. I just think when markets get over extreme, and here's another example. This is C3AI. They came out with an earnings, and we kind of got a good inkling in the extended hour last night when it was trading around this 18 number or 18 handle. It probably over accelerated to the downside too much and then snapped back. If we do get more relative weakness, you maybe pick up some AI. Here's why. Apple, they said they had a decent earning. They lost less, but here's the story. They said they just didn't pick up enough subscribers. Well, Apple is using their technology, and no wonder they don't have any new subscribers because Apple hasn't sold the iPhones yet. So wait till Apple starts to maybe get into that newer cycle of the iPhone 16, and then we'll see what this company has to offer. But I think for a longer term investor, right up against, I don't know, whether it's 17, 16, I think that's another value that you're going to want to pick up on. Those are some of my ideas for longer term trading. Obviously, for day trading, come visit our live trade room. I'll just bring this into focus with you, a couple things that occurred today. In the E-mini room, our AVGO program, we were looking for a volume divergence pattern to get near pivot resistance and or yesterday's high, which was exactly what we were talking about. And wait for that setup. And sure enough, the AVGO went short, as you can see here, and it covered the position. A great trade, did exactly what it should do. Goes short, has the stop, gets to the potential profit. Instead of getting out at the potential profit, which is the blue line, puts in an emergency stop, and then lets it trail. And then the compression, last conditional change concept, trailing stop that we've programmed in, kicked in, and the trade got out. So it was a really good setup, good trade. We called it in advance, and then the algo system just nailed it. The algo on the ES model or on the SPY model was actually short, and it did trail the stop and it liquidated. Now, this has got nothing to do with overall direction of the market. This is an algo trade, swing trade that we use for the SPY. The NASDAQ is still currently short. People ask, how's that performance again? Once again, it just came off an all-time high, and it's not taking into account to this current position that it's in. We'll find out. It's taking a little bit of heat. You can see that right there, a little bit of heat. The ES went short, still holding a short position, and that's the ES, and that's just an overnight day trade. There's your overall action of the market. We'll see what's going on with the unemployment report. I don't know if that is going to be as important as the market's weight in anticipating what the Federal Reserve is going to do, whether it's a quarter or a half. Either way, I think the market's demonstrating that there's some more relative weakness coming into the market, and it's from a seasonal perspective. The advanced decline today on the SPY only had 123 stocks advancers, 374. Next gap downside is around that 536. Again, that concludes tonight's session. I'll put out more stocks for you guys and their supports as the month and the days ahead progress. I think we're going to have an exciting time period for trading opportunities in these volatile periods, especially as we get into the end of this month and going into the end of the year. So stay tuned. If you like what you see, give me a thumbs up. Otherwise, subscribe to the YouTube channel and you'll get these alerts and these updates and market conditions as they're posted. Have a great afternoon. Thanks for joining me. I'm glad you were watching.